Take the discussion forward with Raghav Jindal, who's the managing director at Jindal Drilling Industries, is joining us now. Pull up the long-term chart of Jindal Drilling, and you would understand what I'm talking about. It has given many times return to its shareholders, and very justifiably so, because of the kind of improvement we are seeing in the profitability last few years. Today, we are talking to Raghav about how things are looking as we stand. They are also acquiring a new rig and moving it into the company. Raghav, good afternoon. Thank you so much for your time. Talk to us, before we talk specifically about your company, I want to understand the demand-supply mismatch. Where does it stand right now? Does it appear that it will last a little more in terms of few years? Are the rates actually edging higher? If you can tell us how's the environment looking in this light?
Good afternoon, Ajay. Yes, there is a mismatch in the demand and supply. If you see, ONGC had contracted for about 26 rigs in the past few tenders, and it's got only 22 rigs. So there was a shortfall of about 4 rigs, which would continue because we do not really see any new rig being manufactured. It's only if some other rigs which come into India from outside India. We have purchased one of the rigs which was working in Mexico under our own fleet, and we would be deploying this post December 25 next year. So that would help. But otherwise, yes, there is a mismatch, and hence the prices are increasing. We've seen the current tenders being bid at about 100,000. So it's an upward trend, and it looks quite good.
I want to understand what are the industries where demand is actually coming for, and when you talk to your clients, what is the kind of conversations you're having?
So the demand is stagnant. It's just that they have not been able to get the rigs that they wanted. What is working in India is getting renewed, but for the additional requirement, they have not been able to secure rigs.
Right, Raghav. Good afternoon. This is Vinny joining in the conversation as well. Let's talk about that recent acquisition of the rig also, which we're talking about. So one, in terms of overall, how much of the incremental contribution would come on the books from this acquisition? And also in terms of the completion wise, could you just help me understand, does the company have sufficient cash to purchase this asset, or how will the payment work as well?
Hi, Vinny. So yes, we've got the shareholder and the board approval to buy Jindal Pioneer, which is currently working in Mexico. And we hope to get the RBI approvals, and we've applied for it. And sometime in the next quarter is what we expected to join our fleet. So yeah, the purchase price is at $75 million, and it is through internal accruals itself. It would be paid in a staggered manner. And as long as, so this is on a bareboat charter with a Mexican company at $35,000 this year, and the next year it'll be at $40,000. So approximately it'll be about 100 crores increase in revenue for Jindal Drilling, and I would say a bit of at least 85,000 crores.
Right. Raghav, I understand that you are running at a run rate of almost 170 to just under 200 crore as far as your EBITDA is concerned. The annual run rate FY23 closed at 178. You're already 190 in the first 9 months. The way things are, the way you are actually having newer rigs now, the asset acquisition on the one side, and the environment and the rates, all three put together, what kind of run rates would you like to see in 12 to 24 months on your EBITDA front?
So since these are mostly long-term contracts, 12 to 24 months, I would not see major changes. But post 26, when most of the rigs are going to be renewed, that's when you will see a lot of changes and upscale in the revenues. And we have one rig, Jindal Supreme, which was contracted and which is going off contract now, and in another 6 months it will join at a higher rate. So again, at that time, you will see a upsurge in the revenue.
Okay, so between beyond 24 months, which is third year is when you actually see the full implement. So 26 ending, Are we talking about a 3 to 400 crore EBITDA kind of run rate in the next by 26 end?
Yes, definitely.
Right. And the entire rates is also a moving average, right? They move higher and then they come down. But how's the trend looking like? I mean, it went to 40 to almost 100,000, $40,000 to 100,000 and then came lower.
Correct.
So where is the trend going in your view?
So internationally, the rates are higher. It's 120, 130,000, and it's there to stay. So because the rig demand internationally is low, we expect these rates to stay where they are.
Sure. Raghav, you're expecting the rates to stay where they are on. I just want to understand one more thing, that any of your rigs are actually coming in the near term, in the next 12 months, up for renewal, or any in the short time, and could this be at a higher rate then?
No, so it's mostly post 26. There's one Jindal Explorer which is coming off contract in May 25. So yeah, so once it comes off and it goes for refurbishment, so it's post 26 that we're looking at major changes in contract values.
And how's the business plan? I want to, so, unfortunately, as it may be, stock markets have a very short-term focus many times, and they just focus on 2-3 factors which impact the immediate quarterly profit, or say annual profit, or maybe rates, stuff like that. But I want to leave after a discussion on a point, more of a 3 to 5 year kind of a picture. What's the business plan? You're flush with liquidity right now, and the cash flows are likely to be strong. How would you be deploying that, going about deploying, and slightly longer term vision of the management, if you could share with us?
So we are definitely looking at increasing the rig fleet. We are actively looking for some acquisitions. There are very few rigs which are available internationally, which would suit the ONGC requirement as well. In my earlier interviews, I had told that we were speaking to ONGC to relax their tender requirements so that we can get a few more rigs. Building up new rigs is not really we're not really doing that at the moment. But if there is a good acquisition, we would be looking into that. And so for Jindal Drilling, it's mostly related expansion. So if we get something in the jack-up units, that's what we are going to be aiming for.
Basically, what the roadmap is looking like, that every 3 years your EBITDA can actually double. So your company should be seen more on a 3-year basis.
Earlier, so that's why you've seen this upsurge. And we still have a few of our rigs contracted in the 40s. So once they come up and get to the 100,000, I think that's where the market would be staying at for a while.
Okay, Raghav, thank you so much for joining in with us. It's a pleasure having you in the show, and surely knowing your outlook for 3 to 5 years has been very interesting. So, Raghav, thank you so much as always for giving us your time as well.
If you like this video, then like, share and subscribe to ET Now.